Alright guys, so the global trade war is escalating, and today we must talk about Canada's difficult choice. Now, since Trump came into office, the Canadian economy has been facing an existential threat. While the tariffs have been delayed until April, the punishments are still on the table. In January, US importers scrambled to front load their buying of Canadian goods. Exports have been flowing into the US, pushing Canada's trade surplus to an all-time high, an incredible $10 billion. Now, we can expect this to escalate in February and March, but realize this isn't going to last, especially if Trump goes ahead with his tariffs. Exporters in Canada could face a sudden collapse in trade because US companies won't be able to afford the 25% increase in price. And with all the front loading going on now, there isn't much need to buy in April onwards. And this puts the Canadian economy on very rocky ground. Because of Trudeau's inaction, Canada's trade relations are hardly diversified. And to mend this is going to take years, if not decades. Meanwhile, Trump is going to ramp up the pain. The 25% tariff has been delayed, but a new punishment on dairy and lumber exports are coming. And according to him, Canada is cheating US farmers with tariffs. They have imposed sky-high tariffs on milk, butter and cheese, all of which are well over 200%. Now, whether this is true or not, frankly, it doesn't matter. Trump has written a narrative, and this is his justification to impose new tariffs on their economy.
Canada has been ripping us off for years on tariffs for lumber and for dairy products. 250%, nobody ever talks about that. 250% tariff, which is taking advantage of our farmers, so that's not going to happen anymore. They'll be met with the exact same tariff unless they drop it, and that's what reciprocal means. And we may do it as early as today, or we'll wait till Monday or Tuesday, but that's what we're going to do. We're going to charge the same thing. It's not fair, never has been fair.
So now lumber and dairy jobs are on the line. Going ahead with his reciprocal tariffs will likely decimate parts of the Canadian farming industry. While the US Dairy Association is happy about this, we could see farming jobs up north get utterly decimated. A 250% tariff will most definitely trigger thousands of job losses. And if that isn't enough, Trump has also confirmed the unthinkable, that tariffs on Mexico and Canada won't just stop at 25%. It's very possible that it could go higher than that. We could end up at 30% or even 50% by the end of the year. Trump could ramp up the pain to slowly deindustrialize Canada, to ship production across the board back to the United States. Now, Canada has to diversify their trade, that much is clear. They cannot keep living in a state of eternal blackmail, and it looks like China is giving them a kick from the behind to choose. China has officially imposed 100% tariffs on selected Canadian imports. Now, if you woke up to this news and you feel shocked, I'm telling you to calm down first. Firstly, China isn't really against Canada. This is a big wake-up call for Canada to choose between following US orders or to embrace free trade. Now, let's explain why Beijing is turning up the heat on Canada now. It's not an accident. It's definitely planned, and the timing is no coincidence. And it all stems from the US approaching Canada to join them in tariffing China. Now, Scott Bessent has admitted to the world that this is the containment plan.
I do think one very interesting proposal that the Mexican government has made is perhaps matching the US on our China tariffs. I think it would be a nice gesture if the Canadians did it also. So in a way, we could have fortress North America from the flood of Chinese imports that's coming out of the most unbalanced economy in the history of modern times.
Now, that being the case, the Chinese were carefully watching for what happened next. Unfortunately, we have a series of events that signal Canada might be about to cave to Washington's demands. Now, there were two big mistakes made by Canadian ministers. In hindsight, it's obvious that China would take action. The Foreign Minister Joly just told the world that Canada is open to discussions with the US. They are considering to match America's tariffs on China. And to Beijing, that's crossing the red line. You are basically allowing Washington to control your foreign policy, your economic policy. And knowing Trump, he'll continue to push, and push. Now, the next incident is Canada's Finance Minister LeBlanc bowing down to the Trump White House. According to him, Canada is prepared to work with the White House to further measures to prevent China from dumping into the North American market. In the weeks to come, Canada could very well join the US and impose additional tariffs on China. Chinese goods coming to the Canadian economy could face an additional 10 or even 20% tariff punishment. So, this is the situation China is facing, and can you really blame them for retaliating now? By hitting Canada with trade tariffs, China is basically dragging Trudeau to show his hand. They are forcing Canada to make a decision. Either stand up for your own economy and use this chance to diversify your trade, or you can follow US orders. And if you do, Beijing will cut trade away from you. Now, back in 2024, Justin Trudeau aligned Canada's economic trade policy with the US. He imposed a 100% tariff on Chinese EVs coming into the Canadian market. And understand how brutal that is. It's enough to make EV exports from BYD uncompetitive. It closes off a market for China while increasing inflation for Canadian consumers. Both sides are hurt, and the only big winner here is the US economy. But that's not all. In addition to the EV tariffs, Canada went one step further. Trudeau also imposed a 25% tariff on Chinese steel and aluminum. So it's a triple whammy for Chinese exports. Affordable Chinese steel can't enter Canada as well. Now, this is in a time when the US is about to close off the auto market from imports up north. It's not really a good idea. This has backfired. From China's perspective, this was a slap to the face in 2024, and for Canada to discuss matching tariffs with Trump on China now, well, that's simply a step too far. Trudeau has crossed the line. And understand what Trump is trying to do. He wants to drop the US trade deficit with the world. Cutting away Mexican and Canadian imports is just one angle of approach. The bigger headache to the US, to their economic power, is China. And unless he can clamp down trade there, it will be impossible to reshore production. Even though Mexico and Canada are his biggest trading partners, the US has the biggest trade deficit with China. In 2024, this reached almost $300 billion. In other words, the US imports $300 billion more than their exports to Beijing. Putting it another way, the US is sending a ton of wealth to China because Chinese goods are just so competitive. In contrast, their trade deficit with Mexico is only $170 billion, and with Canada, it's only $63 billion. But here's the problem. The US can't cut all trade with China without spiking up inflation. Remember, 80% of stuff in Walmart alone is made in China. They come from Chinese suppliers. And that's why Trump wants to mobilize Canada and Mexico to punish Chinese exports. The US economy will hurt less. The pain will be passed on to their neighbors. And if this works, it will hurt Chinese trade to North America. So US inflation won't get out of hand, but China still gets punished. It's a really insidious plan, but we are in a trade war, so anything goes in 2025 now. And when you look behind the scenes, behind the curtain, it's no surprise that the US is pushing Canada towards the trap. China simply reminded them of the consequences. Beijing has imposed tariffs of up to 100% on canola, pork, and other food exports from Canada. Officially, this is in retaliation to Trudeau's trade war on Chinese EVs. But the underlying message is very clear. If you follow US orders to hit our exports to you, we will counter tariff you. And here's how serious the situation is for Canada. It's a multi-billion dollar crisis. China is the world's biggest consumer of food. They import a ton from the world, and this demand is enough to swing markets and put farmers out of business. Over 50% of Canada's canola exports alone goes into China, and that's nearly $4 billion of trade now at risk. A 100% tariff could wipe it all the way down to zero. No one will pay twice as much for the same exact product. China's supply chains are extremely fleshed out. They can always import food from other producers in the world, especially the BRICS. China also has a $1 trillion trade surplus with the world, So they have enough money to cover the shortfall of imports. Even if prices do rise, China's inflation is one of the lowest in the world. While it's true that Canada is the world's biggest producer of canola, China is in second place. They produce nearly 15 million tons of canola oil annually. There are other producers that can export to China, and this includes India, Australia, and of course, Russia. China won't starve. In addition, Chinese farmers will take this chance to ramp up their own domestic production of canola. As a result, China will be even less dependent on food imports from Canada down the line. Now, I'm not saying that Canada has an easy choice here. It's actually an extremely difficult one that will backfire in some form no matter the choice. It's choosing between saving your economy today but doom it tomorrow, or you have to embrace massive pain now. If Canada rejects the US, Trump's tariffs could always push them into recession. But let's say Canada gives the finger to China and sides with the US. The immediate effects also won't be good. Canada relies on affordable Chinese imports to keep their economy turning. The majority of imports coming from China are either capital or intermediate goods like machinery, and these are the imports needed to produce the finished products. Canada brings in cheap electronics from Chinese suppliers to use them to make cars and assemble phones, and this brings down the cost of production, a good thing for local Canadian consumers. So, what happens if Trudeau decides to bow to US orders? By tariffing China, local inflation in Canada would rise. The cost of living would be even more unbearable. And if things get bad enough, Canada's cost of exports will rise through the roof as well, which means they would be forever locked to selling to the US. Trying to compete in the global markets would be quite impossible. Now, Canada isn't stupid, they know what Trump's endgame is. Raising tariffs is a means to an end, and the end goal is to deindustrialize the world to reshore everything back to the US.
This is creating too much uncertainty. And we know that business investments is allergic to any form of uncertainty. And we know also that President Trump wants to attract more of the investments to his own country, going against the very trade agreement that has bound us for many, many years. Trump administration has not only put trade as an issue on the table, they've been presenting many other things, including military cooperation, security and intelligence cooperation, water cooperation, and I could go on and on and on. And that's enough. Canadians have had enough.
So they know the deal. Trump wants the US to win at the expense of everyone else. So now the ball is in Canada's court. China's latest tariff is basically an ultimatum to Trudeau, a reminder with big stakes on the line. If you choose to side with the US and punish us, we will hit your export market as well. And there's really no other option. China can't just sit back and do nothing. And that's why a trade war benefits no one. It's one big deadly spiral of escalation where if your economy is big enough, you have no choice but to hit back. But let me know what you think. How will Canada respond? And will they continue to side with the US? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.